Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Sorry about that. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here by himself because Dennis and Joel, here they are. Here's Dennis, and Joel is TBD. They're here. Everyone's a Monday morning. Everyone's still waking up, but the show must start on time is my new decree. So, good morning, everyone. Happy Monday. Hope you all had a great weekend. Happy Father's Day belated to you, Dennis, and Joel, if you ever bothers to show up today. We got a lot to talk about today. Crypto is the story of the day. A crackdown in China is hitting that entire sector here this morning. There he is. Happy Father's Day to you, Joel, as well. We'll talk about crypto. We'll talk about the banks. We'll talk. We did have an M&A deal today. We can hit on that. We want to talk about Lordstown Motors. There's some very nice reporting by the Wall Street Journal about some insider sells in RIDE back in February. So we'll get to that as well. Don't forget, today and tomorrow actually are Amazon Prime Day. So get your orders out there to buy stuff on Amazon, and maybe your orders out there to buy or sell Amazon stock. I don't know. Tim Quast is our first guest today. He will join the show at 8:35. He's the CEO of Market Structure Edge. And at 9, we'll do our weekly IPO preview with Matt Hammond from IPO Warriors. Before Joel brings up his charts and shows us how we're doing this morning, I want to remind you all to hit that like button, please. Takes 2 seconds of your time, and we appreciate that. If you're not already subscribed to Benzinga on YouTube, please do so. And we appreciate that as well. All right, Joel, what's the word on the market this morning? Are we up? Are we down? Are we flat? Are we what?
What are you wearing? What is that?
Did you get one of these, Dennis?
No, I guess I'm not the best dad ever.
No, you didn't. And who is this? Let's see who's going to be good. Who is this?
Nothing's gonna ever bring you down. Great song, though, Joel. Great song. That's a good one.
That was good.
Tina Turner.
Is that who sings that?
I think so.
You know what movie that's from, though? That was the movie that made that song.
Wow. What?
Spencer, you know.
Hold on a second. Tina Turner does not sing that song.
I don't think. I think
like
he just
it.
made that up. But I know what movie.
I
You know what movie that was from? The chat knows.
Is that Joe Esposito? Is that?
It could be Joe Esposito.
Joel just makes stuff up as he goes along. But what movie?
Yeah.
What movie made that?
We were actually just talking about this last night because I've never actually seen Karate Kids with the 3 and 4. And I think they made
that was the first one.
That was the first
Karate
one.
Kid. That was the song. It was like, yeah, Daniel-san, go. You're the best around. Right at the end.
Yeah,
awesome. Great movie. Now I'm in a better mood.
All right. So
I don't need to fire you up a little bit, Triple D. You know what? I had this problem too when I used to go into the office. I go in the office on Monday, and like all these kids, they're all hungover from the weekend, and they're like
me, I was.
They're like, they're on the keyboard. I come in, I'm all fired up and everything. And they're like, just typing. I have to kick Spencer a few times and everything to get him going, but. No, great Father's Day, Dennis. Did you have a good Father's Day? Did they treat you well?
Yeah. Took my dad on a road trip with my mom, and the kids went, did some swimming, some fishing. It was good.
Yeah, okay. Guess I got more.
What'd you do?
Swimming. I swam 2,000 meters, and then I biked 15 miles with Lisa.
Oh.
And then we did a dinner, and I got Michigan apparel. Not this. This is old, but I got.
I thought we were
needed new
done with
shorts.
sports. Weren't me and you? Didn't we give up sports like a while ago when all of our teams just suck every year? Didn't we give up sports? I thought we gave up sports.
We said that was a bad investment, a bad long-term investment.
Yeah, is that what we said? It is. It really is a bad investment because the odds. We went to the odds, and there's so many teams, and it's like the odds of your team winning in any given year is, if you got 30 teams in the league, it's like 3%. And then, in the baseball, you got the Yankees that win too often, so that knocks you down even farther.
Don't even go there with me, Dennis. The Yankees are in the midst of the longest World Series drought, the third longest drought in history. Okay, so
how long is this?
They haven't even made the World Series in 12 years.
Whoa! Hold the prep. 12 years of pain for Yankee fans.
Yeah,
12 years of pain.
Yeah.
Meanwhile,
my strife.
Tigers. We won't even go.
Let's not go. Okay, S&P's up 15.25. Oh, got shellacked on Friday. Got bullered. I hope no one takes my comment on that.
Bullered. I like that.
Got bullered.
Yeah, bullered. Got bullied around.
Yeah, the whole
bullied to the downside.
But we were like 40 points lower. 41.2675. Caught a bounce. Friday's intraday highs up here too. We got some good levels to look at on the upside. The downside is going to be tricky. Did you miss the dip? Did you have to buy today because you missed the dip on Friday? Crude up a few pennies, not much. 71.31. Gold up $11. It's trying. Silver, that's up 6 cents, 26.03. Bitcoin got China'd. That's down 3,000 at 32,300. Is that not politically correct? Can I not say that?
I think it's fine. I'll say Bitcoin got China too.
And Ethereum down $216.
Oh, Ethereum. Ooh.
Yeah, down goes Ethereum. But
that's 0.5% of my portfolio is down like 0.45% now. Not that great. There's 0.05% of my portfolio today on Ethereum. Not happy about it.
But the market's up. So Bitcoin down, market up. That's good, But I don't know. I don't know if you want to talk to cryptocurrency. It really faked everyone out. We're going back over 40K. And I told y'all that was resistance, still a trading range. And then 1, 2, 3, 4 days in a row. The big thing is if you take out this low at 30K. Yep. 20K.
We take out 30K. Where are we going, Joel? Give us scenario analysis. 20 immediately to 20. That's where I originally bought, was 18. I'm gonna give this all back. Should have sold more. You know what I did wrong? I should have sold out everything Saturday Night Live when I called it.
Yeah,
every single piece of crypto that ever existed. It was actually only Dogecoin topped on the Saturday Night Live event. It was actually about a week later that all the other cryptos started to roll over. But is this not just like, there's so many, and I was thinking about this over the weekend, here I was thinking about stocks and thinking about the markets over the weekend, which I shouldn't be, but this has been like the last couple of years where money's just created from nothingness, where we just come in, we create new cryptocurrencies and they just create money from nothing. Does eventually some of this just go back to nothing? And I'm not saying Bitcoin's going to nothing, but there's, a million other cryptocurrencies out there. And a lot of these, this wealth created, we watched the one go from $60 to a penny in a day. But there's how many cryptocurrencies are out there, Mr. Israel?
So many.
There's so 1,000? Is 1,000? 1,000 more?
Yeah. Let's see. Let me just do a cursory search. There's probably I would say well into the hundreds, if not more.
All right, hundreds and hundreds, possibly 1,000 cryptocurrencies.
Plus, there's all the maybe tens of thousands of DeFi tokens or hundreds of thousands of DeFi.
Maybe all that is
even qualified cryptocurrencies. Oh, here we go. There's about, in terms of if you're counting just cryptocurrencies, there's about 5,000.
I'm going to say that some of these are going to end up at zero. Some of these are not, maybe, but a lot of these are. It's just created from really nothing.
Dennis,
I guess you could say companies are created from nothing.
Dennis, I have news for you. Most of them are already at zero because I don't know about you, but there's no real difference between 2 cents and zero to me. And a lot of these are like fractions of a penny or fractions of like 1.0000005 cents, right? So they're already at zero.
I'm just going to say this is all speculation. It's all speculative. Maybe, and I have a little bit of Bitcoin. I have a little bit of Ethereum. Everybody's been trying to sell me on the Cardano, and everybody's been trying to sell me on a lot of other cryptocurrencies as well. It's going to be zero. And it's not out of the realm of possibility some of the big ones could end up being zero. I don't think that's the case. I think Bitcoin's going to continue to have some value, but it's tough to just you can't just put on your fundamental hat. Like when people come up and say they got a target of 500,000, they got a target of zero, or they got a target. I mean, how do you really value this stuff? I mean, at least Ethereum, I guess you can look at the network and say there's value there. It's really tough. I mean, as an analyst, you look at this and I don't know how you come up with price. And it's the same thing, not only, with the meme stock. So you could say cryptocurrency has really created this meme stock bubble as well. I mean, it's been created because people are pumping their stocks, and obviously, there's Reddit and a lot of different social media platforms that are basically being used to pump stocks. But I mean, if you can create just value from nothing in all these cryptocurrencies, then why can't AMC, a stock, which is an actual company, loses money, mind you, but maybe they won't always be worth whatever. It's so hard to value stuff when people are just willing to pay any amount of money for anything. It's a tough investing environment to figure out.
Now I take, Bitcoin, it was really the only game in town when it made the initial run to 20K and then everything. But I just think there's too much competition going on. And I also think, and I talked with Rob about this and stuff, I really think some ARBs are starting to get into this stuff. And once the ARBs start to get in there. Yeah, once the ARBs get in there, the inefficiencies go, then it's a different kind of market. And look at where Bitcoin, I mean, between 30 and 40K, Ethereum, I don't know how easy it is to hedge. I don't know. What if you have the futures contracts on again? Oh, Ethereum's making a new low for the move, Dennis.
Where is that?
Did you see that? These are the futures, and these are my futures charts. So I don't know what they.
None of these cryptocurrencies look good. None of the charts look good, but we know they've bounced back a lot of times. I mean, the Bitcoin, it's banged, it's coming down that 30,000 floor multiple times there now. You think eventually, we used to always say no such thing as a triple bottom. So that looks like it's trying to, potentially take out that low. So we'll see what happens, but it's tough. If I was long a lot of cryptocurrency, I'd be really scared right now.
And the other thing, Lee says, I don't know anything about cryptos. You know what I know? Is that this had a break from 65,000 to 30,500, and it could even sniff a 50% rebound. If this thing was strong, if this is like the true, we're going to 100K, this thing would have been at 47, 48 in a heartbeat. It would have held, boom, back up to 65. I mean, what do I need to know? I need to know it's going down. I need to know I don't own it. And I know maybe I'll look at it at 20K. The other thing too, like the currency, the transactional currency. How can you transact? Like, what if I did a deal with you on Friday in Bitcoin, Dennis? Am I going to pay you on Friday's price? And
I don't know.
Down 6%.
I don't think it's a means. I think there's better cryptocurrencies. I don't think it's a means of transaction. I don't think it ever was. I don't think we're going to transact.
We hear that.
Bitcoin. I know that's another bull argument. But then they're saying, oh, it's just a store of value. The store of value isn't working that well either. So it's tough. People are in the chat saying we don't know what we're talking about. Gary, 100% I don't know what I'm talking about Bitcoin. All I do is look at the chart. And you're the same thing. We can't talk fundamentally about Bitcoin. There's really nothing to talk about. You can hodl it. You cannot. I mean, is there a network here? But really, at the end of the day, it's the technicals that drive this. Technicals and social media influencers are the drivers here. That's all you need to know. So I'm not going to sit here and do research and understand crypto better because I think I'm wasting my time. So technicals and social media influencers, if Musk says something, I know it's going to move. I know all those cryptocurrency stocks are going to move. If, it's technicals, if starts taking out the 30,000 level, it's going to be trouble. So, I mean, you can trade anything technically, and that's with crypto. That's kind of all you got.
All right, let's talk about Friday. What a day.
Yeah.
What a
hammered.
Day. What a day. What a day.
Market got hammered.
Yep. It was weak, and then Bullard come on there, and Spencer tried to stop him. And once the ball got rolling, that pre-market action determined it. I think it's a big day for the market. You had the low for the week. And Dennis, did you participate in any of that whooping From 415 to 5.
I tried to provide a lot of liquidity in there, but it's there were some gaps. There was some movement in some of the stocks for sure. You saw a lot of stocks really getting hammered, and the SPY accelerated in the close. Not surprisingly, there was some sell imbalances that were driving it. There was some buy imbalances too. You actually saw some stocks go both ways. But SPY, if you look at the last 10 minutes, we went from 416 down to 414, and then we lost another buck after hours. We're down to 413. So about a 30 handle point drop really in the last 20 handles the last 10 minutes, and then another 10 handles after hours. So they hammered the stocks at the close.
Bouncing back though.
They buy the dip, man. Yep. Overnight. Like we got hit pretty hard here overnight too. How far are we off the lows now?
40 points.
We're 40 points off the lows.
Yep.
These 4 charts still confuse me, and I know we went to the 4 chart system,
okay,
but I'm still not in love with it.
I
don't even know what chart shows me the overnight. Here I am doing the show.
Overnight. Okay. I'm gonna go through this.
Because that's SPY. Yeah, so you don't see it because SPY.
Yeah, because it doesn't have it doesn't have the real market.
Yeah, it doesn't have the real market. Not the market until 4 o'clock when it opens.
Well, 8 o'clock. Right, 8 o'clock to 4 o'clock.
4 p. Yeah, 8 o'clock to 4. I'm saying 4
write this down. Red and green, okay, are the real sessions. Red and green. So you talked about the big flush, okay? That's red. Yeah. Okay. And then the green, boom, there you go. These different colors are the after hours. So you see, this is the end of the regular session. And then they whooped it until you stopped trading, right? Right here, right?
Yeah,
so that ended. I stopped
trading,
right? And then you started trading again at 4. All right, so there it is. And when I go to my futures,
you see all the action in between.
Exactly. But then I got to find
it. Let's see what they've done overnight here, because we were significantly lower here overnight. I checked the futures quotes multiple times last night.
Here's the low.
And that would coincide with 41.30. So how far were we below where we were at 8 o'clock?
40 handles.
Yeah.
Yeah.
So we've come back and we're 40 handles off the lows here now. So we were down to about 25 last night at the worst.
About 27. If you go from the true mark, from the 53.50 mark, you were down about 26 handles. If you go from the 5 o'clock beat down, it was only 10 handles.
The one thing that has continued to work is just buy the dip, because it just doesn't seem to go away. Eventually, you're going to see, and obviously in crypto, buy the dip is not working. And in some of these other stocks, buy the dip is not working. But it continues to work in the overall market because we know rotation continues to keep the SPY up. I'm nervous. I think we're going to have Tim on here in 15 minutes. I think he's still nervous here as well. He was nervous last week. I think he's still nervous here. I've raised cash. We know that. I raised it back up. I put a lot in, then I raised it back up. I've still been sitting on a lot of cash. I'm going to continue to sit on some cash here. I think, honestly, today's rally is a selling opportunity. This is a 40-point handle rally overnight from the lows. I think if you're really heavy or if you're on margin, I think you lighten up into this, because it's just hard. It depends, though, on your allocations. I mean, maybe we just continue and you just want to, if you're long-term, you just want to stay fully invested. But, my job's market timing. So I'm talking to the market timers out there, the people who are moving money in and out. I think you're lightning into this rally.
Okay. Yeah, we've already exceeded the average daily range, so by a good margin, because the ranges have been contracting. We expanded yesterday. The volatility picked up. So a normal day, 63.50 would have been the top of the range. So if you're trading based on that, you got fluff up to 77.50. That was that was 6 points near the intraday high yesterday. So a lot to look at. If you want to be super optimistic and think we had that move from 42.58 and a quarter down to 41.26.75. If you're looking for a 50% retracement, 131 divided by 2.
Math.
70.
Too much
42, 41.84. I mean, there's just so many numbers coming in at 41.80, 41.90. Let's see. We'll see a challenge today. It might not just go right back down today, Dennis. It might just grind you on Tuesday, grind today, Tuesday, Wednesday, and then you got the bank stress test on Thursday.
The big thing we have is the Russell rebalance at the end of the week, and we know there's always volatility into that event. So how does that shake out is really going to be the question. I think after that, once you get into July, we're going to get into summer trade. Like I don't see this, imminent crash coming here, because I think we're going into summer months, and I think eventually we'll slow down. But this week's going to have some fireworks. We're going to get some volatility. The Russell rebalance on Friday is going to be insane, I think, especially with the action some of the small cap stocks have had. So it could be one of the better Russell rebalances that we've seen in a long time. Not better, not meaning necessarily up, just saying more action. So better for trader is action, not necessarily an up market.
You and Spencer said that last week. And then Barron's was like, he took the other side of your trade, and they're like, volatility could this summer be different volatility? But we got through the quad witch. It's always a volatile event. And then you're right. We got the Russell rebalance.
Yeah, and then I think it's going to be crickets for July and August.
4th of July, you got a great week. You got a 4th of July on the 4th, so you got a Monday off. And then that next Friday, I'm going up north for a week, so I won't have to deal with any of you guys. So yeah, I hope the market does slow down in July. That'd be good. But let's talk. What stock? Let's bring some stocks
up. What's up? You said M&A action. What was the merger?
Raven.
There was one Raven, RAVN. Raven Industries. They make what?
Cathy stock?
They make no. They make agricultural.
Are you sure?
Equipment.
I like that was a Cathy stock.
No one knew this. Wow.
CNHI is buying them for $58 a share in cash. So
a couple big cash mergers with big premiums. CAE now Raven, RAVN. Yeah. I've traded this before. I thought Cathy was in this, but okay, I'm wrong. She's in a lot of stocks, but.
Actually, speaking of Cathy, this is off topic, but they had 10 transactions on Friday. I don't remember the last time it was that low number of transactions. But anyway, back to Raven.
She wasn't in there.
I don't really have much to say about Raven. It's taken over. So I don't know. I don't have much to say about Raven. You want to jump into Raven talk?
CNHI is the one doing the.
They're not hitting it that much.
Okay, that's probably a small deal. How big is that Raven company?
I don't know. Let's find out.
Probably. When you get these market caps and you're looking, when they pay a big premium and it's a big chunk of their market cap, then it can get hit.
All right, it's a couple bill.
How much? Okay, so Raven's couple bill. What's CNHI worth?
More, 21 bill. So
yeah. Sorry, 10%. It's 10% of the market cap. They're not hitting at all, Joel. It actually is a good point you're making. They haven't been hitting the acquirers lately. The one we got last week was a private company, but we have seen that lately. Before, a year ago, we were seeing them really hammer the acquirers, like knocking the premium rate out of there, but they haven't been doing that. This is a very forgiving market. It's been a very forgiving market for a long time. So not much to say about any of these stocks. So let's move on.
Can we just talk about like the crypto stocks for a second? We should start with NVIDIA here. NVIDIA is down. Obviously, because it has Bitcoin. Crypto exposure. And then the South China Morning Post, the largest English language paper in China, had a report just about how much the price of NVIDIA graphics cards has fallen in the last couple of weeks or months as the government has begun cracking down on mining. And so there's that going forward as well. There was this overall general negative sentiment this morning, plus a report that the price of graphics cards is just cratering in China.
I mean, NVIDIA's had a hell of a run. It made a new all-time high on Friday. So it did close very weak, which is never a good thing. But, I mean, we got the split coming up next month. There's some catalysts here. Does it get a significant pullback? I think if you get net back down, it's been just an overextended move. So you could pull back to 650 and the bulls would still be in charge here. So I think you wait for a pullback, get down the 650 to 700 area, probably enter a buy zone again. But it's overextended. It needs to cool off, and it does move with crypto.
You also have MSTR, MicroStrategy. Michael Saylor came out and said that they're buying a lot. They bought a lot more Bitcoin. They just bought 13,000 more Bitcoins. and an average price of 37.6 thousand.
Yeah, that's what they do. Is they raise cash, buy Bitcoin.
Yep, basically it's what they do. So they how many offerings have we done in the last month or two? Like 2 or 3.
Continuous. They're doing another one.
No. But the point is, they raise money just to buy Bitcoin.
There's a Bitcoin play. So Bitcoin goes down, they're going to go down. I airball these things. Mara, Riot, BTBT is a little under the radar one. When Bitcoin really gets ugly, they hit square in NVIDIA. On a normal day, Bitcoin's down 1 or 2%. They square in NVIDIA, ignore it. Day crypto gets trashed like it is over the weekend. Square in NVIDIA get hit as well. Even Tesla sometimes. So although they're not seeing Tesla as much as a Bitcoin play as they were a while ago, even though it was never really a Bitcoin play, it was like 1%, but people were associating it with it. So
wait, refresh my memory. Tesla didn't sell their Bitcoin, right?
No, but people are like now because he's talked down Bitcoin.
Yeah.
People are now disassociating it. Is that a word? Is that a word? Disassociating?
Yeah, that is a word.
Anyway, so they're disassociating it now. We clearly saw a relationship for a while when crypto would get hit, Tesla would get as well.
Yeah.
And you're kind of seeing that break down now to a certain extent, that relationship. Tesla's trading down a little bit. But we know Square, we know Dorsey's a huge proponent of Bitcoin. So Square is an obvious one that they hit. But, the first ones they hit always when Bitcoin starts going down is Mara and Riot. Those are the first two I go to as well. And MSTR. Those are boom, 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 those three. And then they start getting, and BTBT is another one. But then they start getting, like Coin obviously is an obvious one too. Coin never moves down as much as Mara and Riot. They're like Mara and Riot are like, they're down 8%, Coin's down 3%. Never moves quite as much, but I don't know. Like we were talking Bitcoin already here, so it's tough to get in. You're just looking at Bitcoin. It's like the banks too, and I talk about the TLT relationships. You just got to understand the relationships. And some people just come in, they say, "Oh, SPY's up, the banks will be up," and it's not the case at all anymore. All the banks care about, I'm taking this away from crypto because I don't want to talk crypto anymore. All the banks care about is TLT. That's all they care about. TLT goes up, banks go down. TLT goes down, banks go up. It's not coincidental, folks. Banks were having a tough morning. TLT just started rolling over, and lo and behold, the banks are starting to show some life. That's how this market works.
That's
Relationships. All about relationships. A lot of money made in relationships.
Just to clarify what you're saying the banks follow TLT. TLT does not follow the banks. One is the leader.
Yeah, I say TLT is the leader.
Okay.
TLT leads. TLT started rolling over about a half an hour ago, and the bank started catching a bid. So I've traded this relationship for the better part of a decade, probably even longer than that, and TLT leads. So when you see the TLT turn, like look at the charts. There's proof is in the pudding, right? Look at TLT the last 2 days. Explosion. Everybody's like, what's happening to the banks? The banks are getting killed.
Yeah,
it's not rocket science. The banks got killed the last 2 days because TLT rallied like crazy.
I'm everybody. I was saying that.
There you go. So you learn something. I say this relationship all the time. If you can take anything from our show, learn one thing, that the banks are inversely correlated to TLT. We talk about it every once in a while, but for the newer listeners that are just coming in here, we teach you that. That's a relationship that just holds almost every single day. Sometimes you see the odd day where it doesn't hold, but it seems like 90% of the time I come in, I see the TLT down $1. I was like, oh, banks are going to be having a good morning. Oh, what's happening this morning? Banks are having a good morning. It's not rocket science. It's relationships.
And this is like so contrary. I don't want to get into like the whole the Jerome Powell Bullard thing, but Bullard, what Bullard was saying on Friday is actually bad for the TLT and good for banks that rates are going up, sooner than that. And you know what? Pump and Powell is testifying this week too, or he's speaking somewhere. So that should be another thing in the market. But like Dennis is saying, just don't try and trade what the Fed speak, the Bullard speak, the Powell speak. I mean,
just look at the
what's
TLT.
in front of look at TLT. It broke out of the monthly too. I was talking about that last week, and that, there was like, no one wanted to talk about it. But you had just you broke out of a 3-month high area. Okay, a breakout's a breakout. What did banks do?
Yep.
All-time high.
So let's take this a step further, Dennis. Explain then how you would trade that relationship.
I just look at TLT says a sudden move. You'll see it like sometimes off a number at like 8:30. You know, you have a sudden move. If it's going slow, it's hard to take advantage of it. But all of a sudden you get a sudden move, you'll see it go in the opposite direction. But even just being careful, it's like you'll see the leadership there where, okay, well, Joel's like, great. TLT started breaking out over 140. Well, that was a hint for you swing traders out there 8 days ago to start selling the banks. That was your leader. You can see TLT going up. Banks are going to be going down. And what happened? The bank's been going straight down. Like people look at Citigroup. Holy, and I've been looking at it too. It goes down every single day. Now they've hammered Citigroup a little bit harder than the other ones. But it's not coincidental that you look at that TLT. You can put those two things on a chart. They are a nice inverse relationship there to exploit and to trade. Those are awesome vehicles to trade. Just as day traders, you know, as an efficiency trader, which I am, that's one of the biggest, you know, inefficiencies that exists in the short term. It doesn't exist, you know, continuously. And the ARBs are all, you know, there's high frequency traders are all over that relationship. It's an obvious one, but there's sudden moves, and you can take advantage of those sudden moves. It's always when, you know, price discovery is happening. Right now, you know, you've kind of got, you know, the market's kind of not in a crazy market, but all of a sudden SPY starts tanking, TLT starts moving. You got to look to those banks, and sometimes you can have a couple of minutes. Sometimes there are a couple of minutes to respond. It's usually just, you know, 10 to 15, 20 seconds. But if you're quick, there's big money to make, you know, trading that relationship.
All right. 8:30 here. We're going to have Tim Quast join the show in about 5 minutes. Let's just talk Lordstown for a second here. Right. Some great reporting here from the Wall Street Journal highlighting a number of very interestingly timed insider sales. 5 top executives back in February, including the president and the former CFO, sold more than $8 million worth of RIDE in a 3-day span in February. I thought that every company had like a blackout / quiet period around their earnings reports, like in the
apparently not
2 weeks before, 2 weeks after. So in the article, they said that Deloitte did a survey in 2020 and found that 98% of companies do have a blackout period. I guess Lordstown is in the 2% that didn't.
Does that surprise anyone? Okay, so let's go through it all again. All right. We don't know if we have enough cash to even get started.
That's one.
Good news.
Our CEO and CFO called it quits.
Good news.
We all sell before the crappy earnings report.
Absolutely acceptable.
But the most forgiving market in the history of forgiving markets is what we are in here right now.
Ding.
Lordstown Motors continues to be forgiven. I will tell you from a technical basis, $10 is critical here. You got a little company handle going, though, and you know what? This is the kind of stock, just like has everything going bad. People say, well, it can't get worse, so we'll buy it. So I'm being a little bit sarcastic, but at the same time, I'm not shorting this thing. It doesn't go down on the bad news. I mean, yeah, it went down a bit, but in a real normal environment, this thing would probably be at $1 right now. But it's not, and this isn't a normal environment. This is an environment where AMC is a $30 billion market cap. So RIDE can do whatever the hell it wants. It doesn't want to go down on bad news. Tells me I should not be short it. I cannot bring myself to go long it because I don't even know if this is a viable company, because the company told me that they didn't know if they were going to be, you know, what's the words they use? Spencer Israel?
It was a going concern notice.
Yeah, the going concern notice, which is the fourth thing that, you know, this thing. But you know what? Market continues to forgive.
I finally figured this stock out.
Oh, please enlighten me, because I have no idea about this stock.
Do you know why this stock isn't at zero?
Is not at zero?
No.
Yeah. It's called divine intervention. Okay. Lordstown Motors. There is some great force out there
looking after it,
looking after this stock. That's the only.
You've hated this company from the beginning because they're in Ohio. Okay, Joel's hated these guys from day one. He hates all Ohio companies. Interesting.
Ohio companies, the state of Ohio. Everyone in Ohio. No, that's not true. I have relatives in Ohio.
Wait, so one of in the article, one of the executives at Lordstown sold 99% of his vested equity on February 2nd.
February 2nd. Let's go to the chart.
He kept some skin in the game, Spencer.
He was left with 717 shares afterwards.
Wow. Let's see. February 2nd.
Yep.
Would that
I don't know when the market becomes back to reality on all this stuff. and it may never. Maybe we're just entering this new world where nothing matters anymore. But I don't know. Fundamentals at one time did matter. They obviously don't to a lot of companies now, and it appears that's maybe the case with RIDE as well. I don't know if they end up going out of business even if the stock goes to zero, because we see Hertz, obviously goes bankrupt and the stock still continues to find bids in the over-the-counter market. So it's a very tough market for bears for a long time. That's why, it's hard to be bearish on the show, even though everything in my power wants me to be bearish. And I think Tim's going to come on right now and tell me to be bearish. I want to be bearish, but the market just doesn't seem to allow it. So let's see what happens when Tim comes on here right now.
Are we bringing him on right now? Is it 8:35?
I want to bring him on.
Yeah.
Tim Quast joins us every Monday for Market Structure Mondays. Here he is. Tim, how we doing? Good morning.
Good morning. Happy summer solstice.
Not today.
I don't know.
It dovetailed. I'm not sure what it means that the high point of the summer coincided with Father's Day. But it did. The days, when you're my age, it makes you a little melancholy, because I also have peaked, much like the summer has, because now the days will begin to get shorter. Maybe it's a good segue, Dennis, to your comment about being bearish. If the days are getting shorter, there's less and less opportunity to be bearish. I don't know. We could talk about. I heard you talking about Lordstown Motors. And we can certainly kick that around. I caught just the tail end. I agree with you that there's an absence of rational thought, and things that you think you should avoid may not be, may behave differently than expected. We have a strange market, don't we?
We do have a strange market. It's a difficult market. If you're a fundamental investor, like putting your CFA hat on here and trying to crunch your numbers and come up, with your valuation, and you're looking at AMC, a $30 billion market cap, and you're scratching your head, I'm trying to come up with numbers to value this, but I can't figure it out. And there's certain areas in the market that are still trading on fundamentals, but there's a lot that's not. And I think crypto is a big part of this. I mean, it's very difficult to, a lot of these cryptocurrencies just create a value and wealth from nothing. So, I mean, it's the kind of market that doesn't really care that much about fundamentals here.
Right.
When do we reconnect? Do we ever reconnect?
I don't know, Dennis. I think under the
Dennis, man, throwing a guy under the bus here.
No, Tim's like the guru here, though. He's good, man. This Tim Quast is good. So if anybody knows the answer of when we're going to reconnect the fundamentals, it's going to be Tim.
Well, now I feel some pressure.
But Dennis, easy on the guy. We got him to renew his contract. I mean, come on, easy on him.
You could have said that same thing, Dennis, like 10 years ago, 20 years ago, in 1995. You go, it's disconnected from it. So,
well, we did reconnect with fundamentals multiple times over those years. I think Tim would agree. I think we reconnected with fundamentals very well in 2002 and 2003 after the internet bubble pop. And I think we reconnected with fundamentals after the financial crisis as well. Bear markets tend to reconnect us with fundamentals. We just haven't had one for a long time. So nobody's scared of the bear.
What do you mean? We just had one last year.
COVID. It was a pretty quick one, though.
It was a three-week bear market. No, you're absolutely right, and it's the role that bear markets or resets between the tension, the dialectic of human fear and greed is a necessary part of the puzzle. It's necessary for the proper functioning of business, for the rules of economics to work, for economic systems to be resilient and durable. That is necessary. There's no question that part of the problem, and we're not going to wander too far afield into the discussion of monetary policy, but because the Federal Reserve prevents failure, that we've come to the place in modern markets where we don't accept failure, and that we will do anything, including do the exact opposite of what the history of central banking is, which is that you would take good collateral and charge high interest rates and constrain what you lend to by the limit of underlying currency, we now do the opposite of that. We take bad collateral, we charge low interest rates, and we provide infinite amounts of money. So that then, because it's a great touch point to how the stock market works. And what really matters here is, how do we navigate this successfully as traders? And will there be a reset? To your point, Dennis, but by the time we got through the internet bubble, the NASDAQ lost 83% of its value. It's important to understand that the greater capacity you give to the market to have tensility, stretchiness, the more it will snap back on you when reality returns. And the great question is, when will that happen? And is it upon us? I can make one data set case that it is. And I'm not, and again, I am not saying here on Benzinga Pre-Market Prep that the market is about to fall apart. I do think it's important to tell people. Last week on Monday, June 14th, I sat here and told people that the market could have real trouble into June expirations, that the data were telling us that market sentiment is topped. We're not seeing the sort of influx of passive investment that should happen if the S&P 500 and the Russell indices are rebalancing. We saw a retreat in risk management, even with quad witching. Well, all of those things tell us that the market is likely to behave poorly. Now, the question is, what happens today with new options trading? That's the question. And you look at the futures and you would say, oh, everybody's coming back into the market. Well, I don't buy that. I think if you're counterparties and you've gotten yourself into trouble taking the other side of trades that you have to square by tomorrow, that you want people to take your bait. You would like to offload that stuff onto somebody else. And then tomorrow, you hope that your hedges will protect you. Again, I'm not saying that the market is about to fall apart. There is one data point that we follow, and one data point is not a pattern. There is a pattern in that data. It's not the core thing we look at. But if we look at the standard deviation, and we've talked before about this, between the prices of stocks and the prices of ETFs, in the last 3 weeks, the spreads between those are almost 300% higher than they were when the market fell apart in March 2020. Now, maybe that means nothing. I'm not saying.
Why does that happen?
It happens because market makers don't know how to price exchange-traded funds. Remember, exchange-traded funds, which are there $6.5 trillion of assets here in the U.S. markets alone, there are over 2,000 of them, that those instruments depend on something else for prices, very much like currencies. We talk about Bitcoin. Well, Bitcoin has a finite supply. U.S. dollars do not. And what is the difference between a U.S. dollar and Bitcoin? That. Not much else. Neither one has any intrinsic value. And the dollar floats in relative value to other things. We value it versus other currencies. And ETFs are valued versus the underlying assets called stocks. And so when those things behave in unexpected ways, such as industrials, materials, financials, and energy going up 70%, and then they stop going up and everybody says, oh, that's the end of the reopen trade, those things are very difficult for folks who are trading ETFs to sort out. The only group that performed reasonably well last week was tech. And why would tech perform well? Because everybody was underweight it. This stuff is not that complicated, but it's very important, traders. This all leads back to why market structure matters. This is called Market Structure Monday for a reason, because we don't talk about fundamental drivers. There is no fundamental driver in Lordstown Motors. That's not the thing, but there is market structure and it's mathematically measurable. We talked about Lennar last week and I said Lennar is likely to perform well. Why? Well, its fundamentals are good, but that's not the reason. The reason is all the money was out and it would have to come back into the end of the week because options expire and passive money has to rebalance and people are going to bet it up, went up 10%. That stuff is predictable. It's not because it has any rational basis. I don't think the dollar has any rational basis, but these are all things that we use. And if we don't understand underlying human fear and greed and how they manifest in supply and demand, we will get into trouble. And we don't want to be in trouble, do we, traders? So I'm going to, and now ask me a question, but I'm going to share my screen because I want to back that up a bit with some actual data. Okay, so
Tim,
there's, yes.
I gotta say, you for someone, but you seem like you hate ETFs or what they do to the market.
It's not that I hate ETFs. I think they're a genius instrument. I wish I'd invented them. I mean, it's a brilliant idea, right? You get to take everybody's collateral, commission free and tax free, and then do whatever you want with it. And you sell people ETF shares that they trade and believe that they've got mutual funds that trade like stocks. There is no such thing. If you buy ETF shares, there is no custodial account at BlackRock. So there are no fiduciary assets, people. You need to understand that. If somebody is not managing your money, they have no fiduciary responsibility to you. If I give my money to a money manager, they have a fiduciary responsibility to put my interests first. If I buy a mutual fund, I have a legal proportionate claim on the underlying pool of assets. If I buy and sell ETF shares, I own derivatives. So I'm fine with derivatives. Derivatives are a very useful instrument for about 15% of market cap. Well, if those things become the principal investment vehicle, you have a problem in your capital markets. The capital markets should not be predicated on derivatives. And yet that's what we have. Almost 20% of market cap depends on options and futures. How much of the market depends on ETFs? Well, we track that data. We track how often ETFs are the principal pricing mechanism of the market. And it's almost 85% of the time. Yeah. So if 85% of the time your market depends on something that has no intrinsic value and depends for its prices on something else, you should take a long step back, SEC and regulators, and look what you are doing to people. Because if we do hit a nexus, these things are going to be a disaster for all the people who are depending on them for their retirement assets. So that's it, Spencer. It's not that I hate them. I think that they could be part of your portfolio, but they should not be the principal way that people are advising people to have exposure, that advisors are advising people to have exposure to the equity market.
We have precedents too. Go back to August of 2015 when we had the ETF collapse. Yes. Remember the day the flash crash of 2015 was ETF based. Absolutely. And I was trading ETFs and you could see it, and there was like it got ugly, and that was definitely ETF based in the past. I mean, the ETFs are the driver. You're absolutely right. I mean, I do it too. Bright Trading has a pile of traders that are arbing the ETFs against the individual stocks. I mean, and then you can arb the ETFs against the ETFs. I mean, everybody's just leaning on everything else. There's like one thing, and there's a million ETFs leaning on that one thing, and that one thing moves, and all these million ETFs all of a sudden like, whoa, pull the bids. So it works 99.9% of the time, but August 2015 we found out it didn't work for at least a few minutes that day.
No, it's a very good point, and that's a great way to couch it. It's not that it doesn't work most of the time. One could say the same about a bridge over a river. Well, most of the time it works, but if you're not paying attention to the condition of the bridge, the one time that it doesn't could be a disaster for you. That's the point. And here's another great thing to think about when you think about the credit default swaps that benefited folks like Michael Burry, Cyan Capital, the principal character in The Big Short, the book by Michael Lewis and the movie. And what he saw was that all of these people were piling into things, and you look at the underlying asset class, and it didn't support them. Well, the same thing, you have to look the same way at the market here. I'm highlighting information technology. There's the tech sector with about 430 components, and here's broad market sentiment. So traders, you can do this. Go to market structure. I'm at marketstructureedge.com because it's the quick way to get to the database. And you can register, just put your name and email in it, and you can follow along. This is a core part of what we look at. The market most times reverts to 5. So, and 5, it's just a 10-point scale of supply and demand. Stuff's above 5 tends to do better. Below 5 tends to do worse. Look at industrials. They're reverting to 5 and falling. Well, it was already predictable. Now people are saying, well, the reopen trade is over because industrials are falling. No, they peaked back here. So that's when you leave. It's not complicated. Then look at tech. Short volume is rising. That's excess artificial supply, and sentiment is peaked and beginning to fall. Will tech carry the market? Well, it's the engine. So if it doesn't do better than this, the market could be in trouble. Again, I'm not saying that it is, but we look at broad market sentiment, so the whole measure of supply and demand for the S&P 500 in broad market sentiment is 5.1. Right, so it peaked back here. That doesn't mean that the market's going to go down right there. It's predictive. So when you get here and the market continues to go up and you say, oh, well, I missed it. No, you didn't. It gives you a warning. And so what's it doing now? Well, it's still falling. So if the market is up 200 points pre-market, or the Dow futures, would I buy that? Well, of course not. Look at it. I look at that and say, well, there's no indication to me that that's a bottom yet. I want a bottom where it stops falling, so I know that supply and demand are equalizing, and demand's going to increase and stocks are going to rise. Well, that's the way that the market works. In fact, it's the way all markets work. Take out the Fed. Take out all the talk about the reopen trade or the work from home trade or EV or clean energy or cloud computing, and just look at supply and demand. What's supply and demand? Well, I'll tell you, demand has been not very good since April. The whole sentiment trend is down. So I'll tell you that I think if we're going to have trouble in the market, it is nearly upon us. If we're going to repeat a correction, this is when it will happen. I'm not saying it's gonna. I just say that if we get out of June, if we drive across the bridge and it doesn't collapse, we'll be okay. But this is the point where it could happen.
Tim, what about these inverse ETFs? Do you even deal with them? I was going to say something. And someone in the chat asked that.
Yeah, maybe Tim, next week we go in depth on the inverse ETF.
And I'll only mention this: inverse ETFs have not only are ETFs not asset backed, because the assets belong to. So BlackRock says to Morgan Stanley, you can sell IVV shares, S&P 500 shares from BlackRock. All that they're selling is BlackRock's name. It's a tracking stuff. So inverse ETFs, and we've got a couple of young guns on the team who love to trade them. I'm old. I can't take those kind of risks. They like to do that, but they're a derivative predicated on leveraged derivatives. That's a very high risk endeavor. Sure, you can trade them, but you have to realize that if the market runs into trouble, then those are the things that will be harmed the most. And here's the thing with derivatives. Derivatives are predicated on an outcome in the future that you try to project. And so when prices become uncertain, the ability to do that becomes uncertain. And so supply and demand in the future become uncertain. And if I'm a bank that is making a market in those things, my ability to forecast my own risk rises. So I will charge more for that. So what matters isn't you and I buying and selling options and futures. What matters are the huge institutional investors like BlackRock, Vanguard, and State Street that use those as substitutes to true up their tracking. Indexes want to be less than 2% in variance with an index. Well, the market is moving more than that. Every stock moves more than that every day on average. And so that then makes my cost of truing up my tracking more expensive. And it makes me less willing to take risk. And then that feeds all the way through the food chain of investment advisors, the double line capitals of the world. They're all looking at that stuff and they say, that's uncertain. I'm not going to put as much money to work. Well, all those little ripples show up. And then all of a sudden, the amount of market cap tied to derivatives shrinks and the market drops 15%. And we think, what the hell happened? That's what's going on. And it's why this is so important today. Monday, today, new options are trading. Tomorrow is Counterparty Tuesday. That's when the banks will true up their books on what happened last week and against the demand that arises today. Well, if the market is up and it's false demand, tomorrow or Wednesday could be terrible days. I'm not predicting it. I'm just saying I look at that data and say to myself, self, we are staying out of that. And we said this last week. I was fully in cash by Wednesday-ish, Thursday. So, I took my profits in Lennar. I was already out of my positions, and I'm sitting right where I want to be because this tells me wait until that thing bottoms, and it hasn't.
Are you still fully in cash right now?
Yes.
Like all your portfolios, like everything.
My trading portfolio.
Oh,
the assets that I can't. I have to have outside managers.
I have to pay taxes. Then.
Yeah. So, but my trading account, I'm sitting in cash because if the market goes down, and I'm at just about an all-time record high in my trading account. Well, that's where I want to be, right? So that I will wait for things that look good. Let's look at the Benzinga June 21 portfolio. This is stuff we want to talk about. I didn't put much in here that I like, but here's Lordstown, and I know we need to wrap up, but here's Lordstown. So to your point, Dennis, if you looked at it from a trading standpoint, there are good and bad things. It's not very liquid. It trades only about $2,300 a trade. So that will tell you since the average in the S&P 500 is almost $20,000 a trade. That's skewed because of the ones on the high end. About 20 stocks skew the whole S&P 500. There's the possibility that Lordstown Motors is 10 times as volatile as the S&P 500, but it's bottomed. It's only 42% short, and it's 1 out of 10. I mean, from a trading standpoint, I'd go, I might even look at that because when it bottoms,
so bad it has to be
Motors, you'd be like,
it's so bad. It's got to be good.
Terrible, right? It's exactly because it happened last time. If you bought this at 1, you'd have made money.
Crazy.
And it's coming back to 1. I'm not. Don't say Quast. You told me to trade Lordstown. I'm not telling you that. Okay.
Not investment.
I'm just saying that it's market structure rules. It's still it does. And that's the nature of the beast.
All right, Tim Quast, his site is Market Structure Edge. That's what's up on the screen. The link is up on the screen at the bottom, marketstructureedge.com. Tim, always a pleasure. Next week, let's do a little bit more on the inverse ETFs and the effects that those have on markets and any other scary implications.
Good to see you guys.
All right,
thanks a bunch.
You guys know I love ETFs, but Tim scares me sometimes. Let's go to we got 5 minutes left here before I'm going to bring on Matt Hammond. Don't forget, it is Prime Day, so
it's had to run.
Yeah.
I mean, it's just the question is whether the run's going to continue this far, this fast. I mean, why not go to 35.50? That's the all-time high. That's what I'll be looking at. You can look at it two ways. Go up to 35.50. You're at the top of the trading range. Sell. Or, hey, it's long consolidation, 11-month consolidation. You finally break out and you go to 4,000. So Prime Day, they're going to be pumping the results today and tomorrow. See what kind of lift you got, but you got a clear bogey, and that was actually on earnings day. And actually on that earnings day, I remember seeing this thing trade at 36.50. So 35.50 for the all-time high. We're just about 70 points. A little weak. I'm just trying to. For people taking profits on Friday and Monday, from this run, very big run. Very out of the ordinary for Amazon.
I saw
it goes up before Prime Days, Wilkin. That's what we're trying to tell you.
Yeah, the easy alpha's been made ahead of the Prime Day. So what happens on the actual day? Sometimes you see some profit taking. It's had a significant run. You're bumping up against resistance here. Let's see what it does around 3,500.
We talked about this probably every day last week. And then I saw a chart from Bloomberg. Thursday was the best day of the year for mega cap tech in terms of just buying activity for mega cap tech, FANG stocks, et cetera, et cetera. So maybe, and we talked about that. So maybe that comes off this week. Maybe it doesn't. Torchlight TRCH is your big mover of the day. It's it gets pumped on Discord a lot. They posted an update that they're extending the deadline for some merger to the end of the month. But this is a Discord.
Go get them.
TRCH. So have that on my radar as well.
Yeah, I don't touch on that stuff.
What else did I want to hit on here? That actually was kind of, let's do some it was 8:59. Damn, let's do like one ticker from chat before
One ticker.
One ticker, and I'll do more at 9 on PreMarketPrep.com. We didn't get to do a lot today. One ticker do you want to do?
One more. It's not going to be AMC, guys. Sorry. Let's look at how they want to talk about Wish. I don't want to talk about Wish. I don't want to do that.
Yeah.
All right, Neo, fine. You win. Neo. Let's do it.
Let me go first, Dennis.
Go.
NIO had a nice run. I see Tesla's moving up too. I got IO on there. NIO, hold the close. Hold the close, take out 48. I can't say it's ready to roll over yet. Be a little bit cautious if you took out the low from yesterday. That's it, guys. We'll see you at 3:30.
We still got tech in favor overall, and growth tech has still remained in favor, even though we had a rough day on Friday. Some of these growth tech names have held up fairly well. Neo held up very well on Friday, considering we had a pretty ugly day but we've been talking about the resilience in tech. So tech is holding up very relatively well compared to a lot of the other markets. So I think you just keep an eye. If you start seeing tech start to roll over, Neos will lead the charge because it's obviously beta's higher. It's been a great run. 31 to 46, it's up 50%, better part of a month.
Yeah.
It's been a good run. I think the next to continue going higher here isn't going to be as easy. I think there's room to 50 on Neo, and then it's going to get tougher up there because a lot of bag holders from all last year. So
from January
all the way down
February.
Yeah, it looks like it wants 50. I wouldn't be surprised if it gets 50, but it's a little long in the tooth here.
Wow. All right, Dennis, have a good one. We'll see you tomorrow. Let's bring on Matt Hammond now from IPO Warriors. I think I saw it should be a busier week on the IPO front, Matt. I'm not sure if that's accurate or not, but good morning. How we doing? And how does the slate look for this week? Oh, wait. Can't hear you. We're on mute. Ooh, we're trying something here. Whoa. Yeah, let's try something within StreamYard if we can. Let's edit your mic. Oh. Hey, Matt, you hear me? No. All right, well, Matt figures out his mic. I will run through. So everyone who put your tickers in chat, I'm going to go write them down, and we'll cover those at 3:30 today. Hey, we got you. I hear you.
All right, sorry about that. I'm back, yeah.
Excellent.
How's it going?
How does the slate look this week?
We've got another full slate. A bunch of IPOs from last week got pushed to this week. So what we already had as a 9 IPO lineup is now ballooned into a 12 IPO lineup.
Woo!
Last week, we did not see the kind of performance that we generally like in IPOs. I think the market was just a little bit, I think its stomach was a little woozy from the Fed, the Fed announcements midweek and the kind of general malaise of June setting in. But there were still some win opportunities. But as you can see, I did both get a haircut and take a little haircut on some of the losses. But that happens. So we don't have too much to review in terms of win opportunities last week, but we've got a lot to review in terms of what's coming up this week, and we hope to turn some things around. So last week's win opportunities were iSpecimen and Verve Therapeutics. There were a couple other sort of very weird win opportunities, but they involve playing off the drop, which is not generally how I like to play. Or catching a very momentary spike off the beginning. So I'm just going to skip those, mostly just to get to what we have coming up. iSpecimen we put on watch because it was such a low float, just 2 million shares. That's almost unheard of for a big board listing. And I think the minimum is 1 million shares. So to come to market with just 2 million shares, I don't think I've ever seen that before. And we got kind of what we expected, although it priced at $8 and didn't open. It opened at a very low price of $6.27. So it kind of showed you that all it really could do was go up. It's $6.27. at a pricing of $8 with 2 million shares, you're not going to get a lot of people selling their shares who bought it at 8. And that gives you a lot of room to take profits on the way up. Very slow moving, very boring, relatively speaking, but relatively easy to play. So you could take it, from here all the way into day 2 if you had a high conviction for some reason. But if you did play this, you probably got in at 6 and got out at around 7, saying, okay, well, thanks, quick little profit, and moved on to the next one. The only biotech or of all the plays last week that really gave you a big profit opportunity was Verve Therapeutics. And I generally stay away from biotechs. And given the way that other IPOs were performing up to this point, I didn't touch this one either. Although I wish I had. I had put it on the radar because it's Google's first biotech IPO that it's backed. Opened at 30 and then ran up to 39.84 on day 2. And it's trading up around 40 right now in pre-market. So this is one of those times where you see an IPO that's backed by a big investor like Google. We see some of the stocks that are backed by WeChat or Salesforce. These tend to do pretty well. We saw that Monday.com, even though it kind of had an up and down movement on the first day, has since run, and that has backing from Salesforce and some other institutional investors or big name company investors. So when other kind of luminaries or other big name backers are promoting an IPO or participating, you don't expect them to be selling right away, and you do expect them to be buying because they like the company, they want to be a part of it, they want to have their skin in the game. That's a good indication that the stock might run, and we saw this with Verve Therapeutics. So anyway, I'm very happy to put last week behind us because we have a full slate of IPOs this week. And just to run them off, we've got Full Truck Alliance, we've got Sprinkler, First Advantage, Bright Health Group, Doximity, Confluent, Soulgate, Miro Matrix Medical, Unicisive Therapeutics, Mr. Car Wash, Accurix Pharmaceuticals, and AMTD Digital. And you'll recognize some of these names from last week. We had Unicisive Therapeutics, Accurix, and AMTD reschedule due to market conditions last week, which basically means they thought the market was kind of weak and they decided to come back this week when hopefully there'll be more demand for IPO stocks. So Full Truck Alliance, just jumping right in, is considered the Uber for freight. It's a Chinese-based company, and what it does is it connects people who want to ship something directly with truckers who have inventory on their trucks, which is why it's called Full Truck Alliance. Obviously, trucking is a huge business in China. They manufacture just about everything for the whole world, and moving products from the factories to the ports or to the shipping destinations, even within China, deliveries within China is a huge business. They have a subscription-based service, which I always like because that locks in customers who then use the service again and again. They did over 22 million orders in Q1 2021. That being said, they are not profitable. They are focused on growth. And there are new services by Didi Chuxing. Didi is a huge Uber-like operation in China that's actually profitable. We'll see their IPO next month. That one should be huge. And in this case, despite growing revenue, their net losses are pretty substantial. So with a large float, and this is a huge float of 82 million shares, this makes me a little bit cautious. I haven't seen a lot of IPOs with over, say, 60 or 70 million shares do phenomenally well. They kind of just there's just so much liquidity that there's no room for it to go up. It just sort of trades sideways or down. And I will probably watch this and see what it does, given that there are so many other plays that I don't want to get stuck in this one on Tuesday. There are no IPOs generally on Mondays, so this kind of opens up the slate. Don't want to get stuck in this position and miss out on something else. So Sprinkler is an interesting company. They do kind of like, it's a little bit like CRM, but it's more tracking the lifespan of a customer so that you're maximizing your profit opportunities within that customer, with each customer that you have. They have 50% of the Fortune 100 companies are their customers, which is always a strong sign to me. They have growing margins, but they're cash flow negative. Although they were cash flow, they have posted profitable quarters in the past. With a modest float, 19 million shares. This one's interesting. I'll probably play this depending on what I see in terms of the indication price before it debuts. If this doesn't have a massive or a huge overpriced debut, then this looks interesting. If this is 50% or more of the IPO price, I'll probably take a pass on it. First Advantage, this is software for human resource management. They do screening potential employees. That's that's what they specialize in, where they get most of their income from. This is for companies who want to screen a bunch of employees, make sure there's nothing wrong with them, identify the key, which employees are the best, and they are profitable and cash flow positive. And with a modest float of 21.3 million shares, that's been sort of the magic formula we've seen recently. Tech company, software as a service, profitable and cash flow positive. These IPOs seem to have done better than some of the others, where last year we saw companies with just high growth numbers. Nobody cared if they were profitable. This year, these IPOs where they're profitable and cash flow positive have been winners. So I'll probably be playing this one on the 23rd. Bright Health Group. We've seen a whole bunch of healthcare management platforms, and none of them have done particularly well on their IPO debuts. They've mostly either traded flat, given slight, upward movement, slight downward movement, just not a lot of excitement in these. And with 60 million shares, that's a very large float. Last week, we had a similar one with CNVY, and I just feel that there's other plays that will be stronger this week. Doesn't mean it's good or bad. I just think it's, maybe a safe long-term investment, but that's not what I'm looking for with IPO plays. I'm looking for something that has immediate demand that's going to send this up $2 or $3 or more, where I can get in with a big position at the beginning and exit as soon as I see peaks. Okay. Doximity. This is an interesting platform that's a digital collaboration platform for doctors. It allows them to share medical records securely and safely, information, get kind of other ideas from other doctors, share charts and say, hey, does anybody have any ideas what's going on with this patient? And they've had rapid growth and they're profitable with a modest float. So these are kind of, like I said, these are the things that have been performing well. I think you also see a lot of doctors who have money read about this overnight, say, oh, hey, I use this platform. I should go buy the IPO. So I like this for a 2-day hold. I probably won't do a huge play. I'm not too familiar with the platform. I'll do a little bit more research on it today and include that in the newsletter. I send a newsletter out every Monday now. If you sign up at ipowarriors.com, you'll get the newsletter in a few hours with further details on these and a little bit more on the strategy for trading them. But I like this because the media cycle, we've talked about this before. Stock does an IPO. The next day or overnight, people read about, Doximity spikes 25% in IPO. Usually they're talking about the IPO price to the debut price, which is a little bit misleading. The point is, though, a bunch of doctors and medical professionals are going to read about that overnight, say, hey, I use this platform, it's really good, and they're going to go in and buy it the next day. We've seen that a lot with these sort of brand name IPOs where retail buyers who are familiar with it realized that it debuted. We saw it recently with Oatly, which did kind of like not so great on the first day, but then in the last week has done quite well as people start reading that, hey, it's a publicly traded company now. They go, oh, I drink that stuff. It's in all the supermarkets. It's in Starbucks. They're going to be huge. And even though it's overpriced, retail piles in and we see the price of the stock go up. Okay, Confluent is a data infrastructure as a service, and they allow companies to build applications using real-time data streaming. Real-time data streaming are kind of like the buzzwords that have been pushing Snowflake and Palantir. And while they're not kind of direct competitors, being in this industry has been kind of sexy. Then again, they are in the operating losses category. They have growing revenue, they have growing gross profits, and the float is only 23 million shares. So I do like that. And they also have a revenue retention rate of 117%, which means they're getting more money out of each of the customers they have, with over 560 customers that are spending $100,000, or more a year. So these are kind of numbers that a year ago I'd say this is definitely one you want to play. This year I think it's still strong enough, and given the modest float, I like this one for a play as well. And I generally like tech companies. I still think that people understand that data management is a key to the future of business success, and Confluent is well positioned to do that. They have a CEO who kind of literally wrote the book on the Apache software base that Confluent is monetizing. And we've got experts in the industry. We've got a lot of clients that are paying a lot of money, and they keep coming back. I think this is a strong story. People have heard of Confluent. They have great ratings and reviews on websites like Glassdoor. So there's enough ingredients here for me to find this one interesting. Now this was rescheduled from last week. It's basically just a low float biotech, kidney disease and injuries. Roth Capital has not been very well favored by the market on their IPOs, so I'll probably pass on this one. Soulgate, I like this one. Chinese social app. It's a virtual social playground. It's basically kind of a metaverse type. Come in, create your avatar, hang out with people, date, play games, exchange content, message with each other. It's backed by Tencent, which is interesting because Tencent owns WeChat, which is the largest kind of do everything chat-based app in China. So that they got behind this and that it's seen such huge growth is interesting to me. So anything Chinese tech with a low float, I think it's 13 million shares. That's really pretty low for something that has had revenue growth of 644% in 2020 versus 2019, gross profit up 544% in 2020. Those are huge numbers, despite a pretty massive operating loss, and factoring in that this was kind of became very trendy, and we had Corona at the right time with coronavirus lockdowns. This will get a lot of attention in the Chinese market, and for me, this is the kind of IPO that I just salivate over for an opportunity to play it. So I like Soulgate. Miro Matrix Medical. This is a very early stage biotech. Phase 1 is not until late 2022 on their leading candidate. But it is an interesting area. They're bioengineering fully transplantable human organs, starting with the livers and kidneys. And if you can imagine, if you could bioengineer a complete liver or a complete kidney that could be then transplanted into humans, you're talking about something that is revolutionary in the medical world. Basically the stuff of science fiction, building organs in labs that you can then put into people. With being able to control all of the compatibility issues that people have, you'd eliminate the need for organ donor lists. The potential for this is huge. And with a low float of 4 million shares, if this gets kind of a little bit more publicity, nobody's talking about it right now on Twitter or any of the social networks, but if this starts getting talked about and people start, pointing this out, with the low float, this could do pretty well. So I'll be keeping an eye on this, and depending on what kind of social traction we get before it goes live, may or may not play this. Like I said, it sounds interesting, but in terms of a real investment vehicle, it probably, you're looking at a lot of dilution and a lot of time before this makes any serious advances in terms of catalysts that would push the price up on, in a more natural, organic means. Mr. Car Wash. This is another one of those brand name IPOs. A lot of people have heard of Mr. Car Wash because it is the largest national brand of car washes in the country. They have 344 locations in 21 states. They have a subscription-based car wash service with 1.4 million subscribers. They are very profitable and they have solid cash flow. So despite the large float, 37 million shares is kind of, 30 to 40 I consider a standard offering. It's still brand, it's got enough brand recognition. It's got enough, to go on a media cycle where maybe it doesn't get a huge first day pop, but I think if you hold this for a couple days, you're going to see continuous growth on this. And it's towards the end of the week anyway. So if I'm out of my other positions, I'll probably take a play on Mr. Car Wash. I like profitable. I like solid cash flow. I like brand name recognition. So even though the float is a little bit high, I think this one's worth a play. Acurx Pharmaceuticals, we talked about this last week. It's interesting for a number of reasons. First of all, the story is, okay, well, antibiotics are becoming less and less effective because the pathogens and infections that they cure have gotten kind of tolerant to these antibiotics. Well, this is a new class of antibiotics that sort of starts from a clean slate and therefore is more effective, arguably, than kind of the old school antibiotics. They've been labeled as kind of a priority by the WHO and FDA, so they have fast track designation for some of their early stage candidates. They have a pretty wide range of candidates, but when I look more deeply into the company, they only have 3 employees, although they have a fairly large and respectable board of directors and advisors, including professors at Harvard, professors at UCLA. Does make me kind of go, And then the underwriter is Network One Financial, who has done some of these stealth IPOs that we've talked about, and they've kept the float super low. I mean, 2.5 million shares. That's about as low. Like I said, 2 million is the lowest I've ever seen. 2.5 to 3. You're talking about a super low float. So if this does catch any kind of interest or hype on the social media, these have popped into multiple halts, and those are pretty easy plays. You just buy in on the open, start selling out after the first halt, and don't try to be a hero and hold longer than that, because these will fall pretty quickly too. And having said that, being rescheduled from last week actually might bring more attention to this, because people who were talking about it last week and people were talking about it will now be bringing more people on, and you don't need a lot of buyers to send a low float IPO, to ridiculous numbers. And Network One Financial has been doing something funky in some of these where they hold, or I don't know exactly what's going on, but we've seen stocks that are priced at $5 a share debut at 26. We've seen some that debuted at, were priced at $5, debut at 13 or 14, and run up to 25 before crashing back down. So I like playing these, but you want to keep your downside protected. You don't want to be a hero. Like I said, don't, fantasize about holding into 9 halts, even though we see that sometimes. We saw that with UTME, which crashed all the way back down last week. And, get in, get out, take your money, say thank you, and move on to the next play. And another one, AMTD Digital. This was also rescheduled from last week. I like this one. It's Asian Digital Banking Services. They have a very strong license for digital banking in Hong Kong. They seem to have a knack for picking up these limited digital licenses in Asia, and the low float of just 16 million shares with an Asian stock with a Chinese angle on it, rescheduled. I like this one. A lot of people applied for IPO allocation on Webull, so I'll be able to tap into them and say, hey, did you guys get allocations? If they get a good allocation, that's usually a bad sign. Now you have a lot of retail traders who will dump if it debuts at a premium. If people don't get big allocations, that's a good sign that the demand is pretty high and there's not a lot of shares for people to dump right away. But this is a strong company. AMTD itself as a bank is very well established and profitable. This is the digital banking arm, and I believe that there will be pretty high demand for this one, enough to make it worth playing. And by that point, it'll be the end of the week and I'll be pretty exhausted. So we've got a full slate. I'm going to do some more research on these today, send out my newsletter. And really, we've seen a little bit of a shift in the last month. We talked about this before as well, that IPO craze from a year ago, we're not seeing just just buy everything, it'll go up. We're definitely seeing the need to be a little bit more selective. We have to react a little bit more to what is the market's sentiment that day. We need to react a little bit more to, well, where is this debut, price in relation to the IPO price? If it's, too far up, now we need to really think about that downside risk. If it's kind of even, we have to think about, well, is there really demand? And if it's below, it's almost a good thing at this point, because you figure the people who bought in at the IPO price aren't going to sell for an immediate loss. They're going to at least try to wait a little bit and see if it comes up. So I'm having to be a little bit more reactionary on the entry, whereas before I was almost exclusively buying in at the limit price. I've had some good luck or good wins by waiting a little bit and seeing if I can first watch it dip, then buy in. These do have a tendency to come back at the end of the day, or to gravitate back up towards VWAP if you do get underneath that. So having to react a little bit more. We're live trading these on Reddit and kind of getting some ideas. That we have different people in different industries who are kind of, doctors, for example, can come in and say, hey, I'm a doctor. I've never used this. I've never heard of this, or I've heard really bad things about this. Or they can come in and say, oh yeah, Doximity, that's great. I use it, and we're increasing our usage of it. So we're getting different insights. We're getting different ideas about where to enter. We're getting different information on who's getting allocations. We have a few very wealthy people in that group who, are able to get IPO allocations even for the big names. And they're saying, oh, I only got like 5 shares, and then you understand demand for this is probably really high. Let's play it. Or if people come in and say, oh, I got a full allocation, that's a big red flag for me, because for popular IPOs, you don't want a bunch of retail buyers owning it with you, because they're going to sell right away. And it also means that the institutions weren't interested in it, or the float was too high. And there's a lot of reasons why getting a big allocation of an IPO is almost a bad thing. It reminds me of the Groucho Marx quote. That's something like, I wouldn't want to be a part of any club that would want me as a member. And that goes, very directly to IPO trading, which is, if an IPO is willing to give me an allocation, that's probably not a good indication that demand is super high, because that means that institutional investors already passed, high net worth individual investors already passed, and what was left were the scraps at the end of the table. And you don't really want to be eating too many scraps at the end of the table. Anyway, Spencer, that's what I got for this week. Do you guys have any questions or
busy week
feedback on this? Yeah,
busy week. I guess my only question or point would be with, I think it was the freight company when you mentioned the larger than average float. I guess for your purposes in making a quick scalp trade, a larger float it makes it harder. But overall, wouldn't you say that a larger float is better and gives you more confidence that this is not going to be just a pump and dump or whatever?
Maybe more confidence in the company. If I was taking, for a long-term investment, maybe this is interesting. For what happens the moment that the stock starts trading. Yeah. It's kind of like, one of the first IPOs that I tried to play was Uber, which didn't do very well. Yeah. And part of the reason was the float was like 100 million shares. Yeah. And that was one of my first lessons as I started doing this, was understanding that, we had Lemonade came, I think its float was like 9 million shares on the IPO or something, and it did incredibly well. Whereas Uber, which was just a few months before that, or maybe a little bit more than that, maybe 6 months before that, but Uber came to market and it couldn't go anywhere because there were so many shares. And when you have that many shares coming to market, there's just, it's always a supply and demand. And we're talking with an IPO, we're talking about the first day of, of trading. Right. So you've got that many shares. It means that, you have to have so many buyers to push the price up. Yeah. And, so that's why I just feel that, intuitively, my experience has been that the higher the float, the less opportunity there has been.
Fair enough. Growth. All right, Matt Hammond runs IPO Warriors. There is the link up to his site up on the screen. He joins our show every Monday at 9 o'clock to run through the previous week and the upcoming week in IPO land. Again, there is his link. It's also in the description of the video. Matt, thanks a lot, man. We'll talk to you again next week.
Thanks, Spencer. Good luck in your trading. Good luck, everybody.
All right. It is 9:27. We are 3 minutes away from the open. David Green is live trading right now. Before I leave, though, I want to remember to tell you that the next Benzinga boot camp is this coming Saturday. I'm putting the link in chat right now. There it is. Check it out. All-day event. Virtual, obviously, education, trading, charts, setups, the whole thing. There's the link in chat, events.benzinga.com. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to our guests, both Matt and Tim Quast. Thanks to all of you for watching. Please hit that like button. You can also catch this show as a podcast. We're on all the major podcast platforms. Everyone have a good rest of your day. Good luck at the open. David Green live trading right about now. This video will redirect straight to David Green, so you don't have to actually do anything. You just got to stay tuned and watch David Green do his thing at the Open. Everyone, good luck today.